Welcome everybody out there here to our next webinar at JFD Bank. It's a pleasure for me to have you all here, and if I look to at least the names you choose for registration, yeah, it really looks quite international if I can read the names right. So it's really fantastic to have such a broad awareness of those kind of webinars. My name is Stefan Friedrichowski, as always, for those webinars at JFD Power Webinars. And today is the 25th of July, 2019, 7 o'clock, at least Central Eastern Standard Time. I think that's the right wording. I'm in Germany. I think that is quite easy to recognize just from my pronunciation. But anyhow, so it's 7 o'clock and still quite warm. 33 degrees, you might even see at the top of my screen. Yeah, maybe it's as hot as at your places, but it was really a warm day today. Anyhow, we talk today about swap trading. Okay, there might be already the first question. What does it really mean, swap trading? Okay, trades, swap trading is related to swap costs, and that is normally, as the name is already telling, costs. So we have to pay something, and that even every night. You will learn about more details about that in a minute. But there are opportunities that we earn money just having a trade overnight, or to be more specific, at a certain time of the day. Okay, that sounds fantastic. To earn money just because I have an open trade, regardless of the trade finally is going. That comes on top, as always, and that might be positive or negative as well. But there are opportunities where we have so-called positive swaps, positive financing costs, and that's all about within that webinar. Later you will see I have once again 2 Excel sheets, and if you have interest in those, you just drop me a line here at the following email address. You see it on the first page, s.friedrichowski@jfdbank.com, and you may have already downloaded the slides. You will find those in your GoToWebinar control panel, and you can download the slides. Unfortunately, I cannot upload the Excel sheets there. It's only possible to have PDF documents. Okay, that's the reason, and therefore just send me an email to that address, and of course just call me Stefan. That's the easiest part. Okay, and many thanks for all the nice greetings here in the GoToWebinar chat channel, the question and greetings. Thank you very much for that. Okay. Before we really start, you know the procedure. I have to show it once in any webinar. That's by law even, to show the risk disclaimer, mentioning that we talk about trading, that we talk about investing, and we talk about trading strategies. And finally, if it comes to your own trading, of course, you do everything on your own responsibility. I think that's quite fair to understand, and that has to be mentioned in any webinar. And yeah, there's some obligation for showing that information anytime in a webinar. Let me get you a little bit more interested into the topic of today. And of course, we have to talk about the background of swap costs, and especially why those can be positive as well, which is really good for us. And having something which is positive inherently, hey, doesn't it sound like an edge? You know that from many webinars, or within many webinars, especially from my end, we talk about probability advantages for specific trading strategies. And we really dive deep into Excel sheet statistics and so on in order to find those edges, to have power candles, special combinations of indicators, and so on and so forth, in order to find a valuable and remarkable edge for our trading activities. But in this case, we have one which is, just there. Going into the right instruments, into the right directions, we can earn money. Okay, so that, on the other hand, is already an edge. And that's what we are always looking for when it comes to trading. And therefore, we have to talk about the backgrounds, of course. Then it comes to the selection. What pairs in which direction do really offer positive swap costs? And I will explain a little bit how you can translate the specifications you have within your MT4 terminal. If you go, for example, on the Forex pair with the right mouse click, then you will see, okay, they are mentioning the swap values, but in points, and maybe that's not the best unit points. I would prefer euros or US dollar, but some currency at least. And so we have to translate those. How to do, I will explain, and how to find those, I will explain as well. And then you will realize, okay, there are Forex pairs with positive swap values. And then I will show you within 3 strategies, and the wording strategies may be a little bit too heavy because it's that easy. I will show you my personal account because I started thinking about that webinar about 2 months ago, and that was a point in time I opened 18 trades, and we will of course see how those trades are doing. And I can tell you already, the trades are doing well, earning positive swaps and earning money with the trades itself as well. Maybe that is just, I don't know why, but let's see. But it's really the easiest kind of strategy. Just invest in everything with positive swap values. Or you may use the swap table for your discretionary trading. So if you open trades for a couple of days or weeks or even months, then at least what I think is it's a must to have a look before entering those trades into the swap table, because if you go into the wrong instrument in the wrong direction and have a trade there for a couple of months, you might lose even if your trade is positive. So the best or worst example would be a trade on US dollar Swiss franc. There you can lose 12 euros per lot per day just because of swap costs. So going into such a trade discretionary and having in mind that trade might last a couple of months, I think that's not a good decision. And finally, we might just do a selection out of historical data, looking, okay, we know we have 18 possibilities, but maybe there are a few better than others, just looking to historical data. And finally, I want to show you a tool which is capable to show you the swap values and much more. And if you have logged in already earlier, then you have seen already that tool. I just bring it here for a second. So we have price volume indicators. We can see forecasts. We can see swap costs, trend behavior with that tool. I mentioned it already now. Later I will explain the tool. And there's a guy behind, which is Peter Milner. And if you're interested in that, yes, there's a price related to that kind of indicator. But anyhow, it's a really cool tool. I will explain at the very end of the webinar. But let's go back to the topic, the background of swap costs. Okay, in principle, swap costs are financing costs. It's to some extent like, okay, I lend money and I have to pay interest rates. That's quite obvious. I mean, in normal days, when we have interest rates, let's say at 2% or 3%, and not at more or less 0%, at least in Europe, then I can explain swaps already was a very simple trade. If you go long in DAX or any other index, what does it mean? Okay, you lend money and you have to pay interest rates for that. Okay, that would mean just normal behavior. You would have negative swaps and you would have to pay every night a certain amount of money because, yeah, you lend money and it's like that. You have to pay for that. But on the other hand, if we would have interest rates like 2 or 3%, you would earn money for a short trade on an index. That's the normal standard behavior. But for Forex, it's much more complicated. I will show you on the next slide. But before going for that, let me just explain some more details about swap costs. And if you trade, for example, out of MT4, MT5, or anyhow at JFD or any other broker even, what does happen with your trade? Always at 10 p.m. server time, at least that's now the definition of JFD, and other brokers might have slightly other times, but they more or less all are doing the same. Every night at 10 p.m. server time, you would be charged with those financing costs. You see them in an open trade explicitly, and that number, if you have that trade constantly open, you would see that number would increase. Okay, that's exactly because you have to pay every night. And to be more precise, it's really the question whether you have that trade open at 10 p.m. So theoretically, you might open a trade at 1 second before 10. Then, if you would have positive swaps, you could close that trade 1 second after 10 p.m. Then you would get already that swap profit into your final account. But unfortunately, the normal standard trading costs are higher than swap costs, swap profits. So that looks like a brilliant strategy because you have the trade only open for, let's say, 2 seconds. But finally, that will not work. But anyhow, at least that's the definition when it comes to charging you the swap costs in any open trade. And there's another special thing. On Wednesday, you have to pay always the triple amount. Okay, or you have profits 3 times. Hey, why that? Is something special with Wednesday? The answer is no. That 3 times is compensating the weekend because there is no weekend fee, no Saturday or Sunday fee. And that's the reason why the weekend is charged already on Wednesday. For whatever reason, I have no idea, no clue, but at least that's what's being done. So on Wednesday, the idea of that 1 second or 2 second trade around 10 p.m. for some special cases might be already a chance, but that's not the webinar. So I will go for long-lasting trades. As I mentioned, swap costs can be positive as well. Normally, a short trade in an index has positive swap costs only in those days with extremely low interest rates. Even short trades on indices have still real costs. But there are Forex pairs which really show up positive swap costs. The best example, by the way, is US dollar Swiss franc, but I forgot the direction. I think it's a short trade or a long trade. Let me think about it. No, it's a long trade. It's definitely a long trade. Then that is the best choice for having swap profits. And that will be about €5 per night per lot. But later we come to that special pair as well. The background having positive swap costs or positive swap profits, the background is simply different interest rates in different regions. That's the normal standard answer you always get, but no more. Let me explain to you why it really happens. but don't take every wording here 100%, but it's only telling you the idea why it's possible to have positive swaps. And I just go through an example of a specific trade in detail. Okay, and the example is, let's buy one lot long euro US dollar. So it would be, I mean here, I open a trade euro US dollar, one lot long. That's all. What happens? What happens behind the scene, so to say? And let's assume that the exchange rate is 1.12. If you open that long trade, euro US dollar, it means practically we buy 100,000 euros and we sell $112,000. That's what is really a trade, one lot euro US dollar, buying 100k euros and selling 112k, at least for that specific exchange rate, dollars. But now let me change my wording slightly. What it really means is we lent $112,000 in the United States and we invest 100,000 euros in Europe. So lending money in US, investing in euros. That's what we are really doing with the one lot long trade euro US dollar. But now I think it becomes obvious what really happens, because unfortunately we invest into euro. But as you know, the interest rate in Europe is close to zero. Today was once again confirmation of that zero. On the other hand, we lend money in the United States and they have higher interest rates. And as you know, the interest rates for lending money is even higher. So we would have to pay interest rates for lending money, and we would not get any interest rates for the invested money in Europe. Hey, that are real swap costs. That's a long trade. And that's how it works. Yeah, now the good thing comes. Let's turn around everything. Let's open a short trade. One lot, euro, US dollar. Then everything turns around. So then it means we lend money in Europe, and since the interest rates are quite low, it will not cost us that much. But we invest our money in United States in dollar. And since the interest rates are higher in the United States, we would get interests exactly in that country. And now we have a positive swap costs, or some people call that a carry trade. But I want to just share with you the idea of what's really the story behind. One conclusion we can easily one conclusion is quite obvious. For example, if in two countries, in two regions, the interest rates are more or less at the same level, and you know that lending money is always higher than for investing money, then even a long and a short rate both would have real swap costs if those level out, if the interest rates in the two regions are more or less the same. So in order to have swap profits, we need high differences in interest rates in different regions and then going just in the right direction. That's all. That's the story behind positive swap costs. Okay. And that's really the idea, earning money with lending money in a country with low interest rates and investing money in countries with high interest rates. That's the idea behind. But now let's look for numbers for that trading idea, and just go to the slide just to show you that within the PDF document of today's webinar, but finally I simply switch to the real Excel sheet, because then we can see what I do and how I calculate everything around here. Okay, hopefully that's now big enough. As I mentioned, I started the idea for that webinar at the 7th of June 2019, and at that point in time I create exactly that table, and I have updated the table 1 month later, and I will update the table again in the beginning of August. The good thing before I can tell you, the swap rates here, they indeed change on a daily rate. To tell you the story about that, I have no clue why those are changing even without any changes at interest rates of central bank decisions. But there are always small moves, but they are really minor, as you will see within that table, looking for 1 month's time delay here. But let me explain you the table, because what you will find on the website, for example, of JFD, there you can find the swap points as well. You will find exactly those marked numbers here for long and for short, but that are points. But I'm interested in euros. Okay, and in order to calculate out of those points the real swap profit or cost, we have to do a little bit of a calculation. So we need to know what kind of symbol we have. All the Japanese yens are special ones, therefore they have a specific multi. You know the story, like bips. Bips in euro, US dollar are not the same like bips in euro, Japanese yen. There's a factor of 100 between those two. In order to do that kind of calculation, we need the exchange rate euro to the second part. So if we would want to recalculate, or we want to calculate the swap profits and costs for Australian dollar, Canadian dollar, we need the interest rate euro, Canadian dollar, and the given swap points. And then the calculation is quite easy. Let me mark everything here. We just need that multi, and we need the swap points, and we have to divide the swap points by the exchange rate, and that's all for a 1 lot trade. And then you see, okay, a 1 lot trade, Australian dollar, Canadian dollar, would bring you per night €2 costs for a long trade, and 34 cents for a short trade. Okay, that's already a hint that the interest rate difference between those two countries, Australia and Canada, might be not that high. That's exactly the story behind that we have both negative numbers here. But you see already, next line, Australian dollar, Swiss franc, okay, good for a long trade, more than €2 per night if you trade 1 lot. On the other hand, a short trade would cost you €6 per night. And you can see already that I have done a quick calculation. Or let me first explain how I mark, or how I get a colored table here. So I use a threshold. Later I explain why. I have a threshold of €1. I want to highlight all those positive swap values which are bigger than €1, and that's exactly those green labeled numbers here. And you see, okay, there are 18 which have positive swap values. That's cool. So we might invest exactly in those 18 symbols, but of course in the right direction. And you can see the highest number, as I mentioned already, is US dollar, Swiss franc. And reason, okay, United States have not really high interest rates, and Swiss franc is negative, and exactly that's the reason why we have the best number exactly for US dollar, Swiss franc for a long trade. And you find my my example with euro, US dollar. Okay, a short trade should have been positive with swaps, and it is indeed, as I told you the story around. Let me sum up everything then in total. So if, and that's strongly not recommended, if you have 56 open trades, each pair with one lot long, one lot short, you would have to pay every night 110 euro. Okay, don't do it. I know that's a real stupid idea. But if you would go for those 18 with positive swaps, so then on average we earn per symbol 2.55 euro. Or if we have all the 18, then it's 45 euros or 46 euros per night, including now Saturday and Sunday, because, you know, as I mentioned, Wednesday we have the 3-day, so it's really per day. Or if I multiply it with 1 year, now 365, not taking into account public holidays, there are only a few when markets are closed. Hey, we would earn 16,700 euros per year just with swaps. Okay, later remember that number, but please divide it by 10, because I will show you an account, and I opened exactly those 18, but not with one lot. I opened all the trades with 0.1 lot, and that would translate to a potential profit just because of swap profits of 1,600 euros per year. Okay. Can I look at the size of swap for a currency pair on MT4? The answer is yes, and I will show you in a minute. Just a second, then you will find those points and how to translate those points. Yeah, you might use exactly that Excel sheet, or you do it simply by your own, no question. But you will get exactly those numbers, like minus 2.99 and yeah, here's a calculation. And I will show you, because I go into MT4 in a minute. What I would like to mention is, in total, if everything would stay the same, after 1 year, my 18 trades would have earned 1,500 euros. But, you know, still we have open trades. So let's talk about the risk as well. Not in 1 minute, maybe in 2 minutes. You know what I mean. The first, what I would like to mention else here is that what about the changes within 1 month? And if you compare those numbers and just concentrate on the green values, 2.24, 2.21, oh, 3 cents, 1.27, 1.32, that's not a big change. So there are minor changes, but really minor. From 1 month to the other, all the changes are not that big. So that's good to know. We don't have to update that table on a daily basis in order to see, oops, something which earned 5 euros per night shows up all of a sudden with -5. No, that will not happen. It's a slow process. Okay, so if you have the table, you know already one idea what we can do in order to really get something out of our positive swap values. But once again, what I really would like to mention, hooray, we have an edge. And that comes for free. So, and let me bring you the numbers a little bit in a balance, so to say. So 1 lot trade, US dollar, Swiss francs, earns 5 euros per day. You know that at JFD you have to pay €5.50 commission for 1 lot trade. So after 1 day, the commission is paid. Hey, that's good. And after 2 days, approximately, commission and spread is paid. What does it mean? After 2 days, we are not anymore in the situation that we have a principal probability disadvantage of trading. You know that kind of sentence because I mentioned it in several webinars. Trading is asymmetric. What does it mean? We open a trade any trade. In the next millisecond, you are in the minus because you lose commission and spread, always. So that is what makes trading what I call asymmetric. It's a little bit like going to a roulette table. You know, there's black and red. Unfortunately, there's a green zero as well. Both will lose money, red and black. So finally, we have an intrinsic probability disadvantage playing roulette. And the same is true for trading. We have an intrinsic probability disadvantage because of costs. Maybe any decision is 50-50, whether the price goes up or price goes down, but still we have that intrinsic probability disadvantage. But for such a trade, US dollar Swiss franc, we have after 2 days an intrinsic probability advantage. That's cool. That's really cool. And normally we spend hours, maybe weeks, in order to derive strategies finding the right edge. This one we can get for free, that kind of edge. But still we have the normal trading risk. As you know, it's a standard risk. And the daily move of any Forex pair is typically by far bigger than our swap profits. But we can do averaging by a couple of trades, and that's the idea. Let me show you the first strategy. Okay, we simply invest in everything which has positive swap profits, and I put a threshold here into the game, €1. You will find out in a second why. Only if the swap profits are bigger than €1 per night or per day, then I invest into that instrument. Practically, that meant that I opened 18 trades at the 7th of June 2019 because there I started everything. The logic behind is now I will close open trades if swaps get negative. As you have seen, there's no big movements from day to day. It will take time if anything comes from positive to negative. And I will even open new trades if a new symbol is popping up with positive swaps bigger than €1. And of course, I only invest in, not invested already in that instrument. That kind of threshold, the idea behind is to avoid any daily open and close of a trade. Because in principle, it might be that we have 1 cent positive swaps, and the next day we have 1 cent negative swaps. And always buying and selling that instrument, that's not a good idea because then we have always to pay commission and spread. Let me go for MT4 and show you my account. So that's on server 2, and to that we come later. Let me change my profile for swap hunting, and then you will see my 18 open trades. So I have 18 open charts, and just as you can see in some charts, I put the red line because that red line is the 7th of June. So that's the point in time I opened the trade. But now I come to the question, where can I find the numbers? So normally you might have that market watch here, and you have your instrument on the left-hand side with all the details. But if you now go with a right mouse click on a given symbol and then go for specification, then you will see that pop-up window here, and that pop-up window is telling you the swap long minus 3.12 and swap short minus 0.039. And now you see the reason why I use an Excel sheet to translate those points into euros, because I have no clue right away to see what euro value is related. But of course, a positive is a positive number. So whenever you find something positive there, it's definitely a profit for swaps. And you see 3 days swap is Wednesday, so it's in German, but anyhow, there you can find those values. And on the web page of JFD, you will find the same numbers as well. Let me first have a look here for that account, and you see my account has still a balance of 10k euro, and I have floating profits of more than 1,300 euros. Hey, that's great. But that is not the intention of that trading idea, that I have those profits just from the trade itself. What I'm heading for, and let me open the trade list here, and then we can see the numbers for swap values. And then you see that with the euro US dollar trade short, I have earned up to now 25 euros. I would realize that profit when I close that trade. In this case, I have additionally 117 euros profits from the trade itself, just from the right movement. Okay, since I don't know finally in which direction any pair will go, I only focus up to now on my profits on swaps. If you sum up that table here, it sums up to about 200 euros. Yeah, that's what I have earned already now. If I would close everything, then I would have been more profit because my trade itself have been profitable, at least in majority. So here you can see a little bit better that the majority of trades are green numbers, so they have additional profits just from the trade itself. Isn't that a cool idea to have that kind of portfolio? And that was, let's say, brute force. I have just invested without any additional logic investigation in those 18 with positive swaps bigger than €1 per night per one lot trade. That was all. And it looks good. Let me explain you some other ideas, what we can do with that kind of input of having positive swap values. Thinking about you're a trader, you are really doing long-lasting trades. And with long-lasting, I mean really several days, several weeks, or even months. If you have those trades within your trading portfolio, trading idea, trading strategies, then I can only highly recommend to use that swap table as an additional input. As I mentioned, a long trade, a short trade in US dollar Swiss franc would cost you 12 euros per night for one lot. You must have a very good trade to compensate that. So I would not go in any trade. And even if the chart is telling me, a wonderful idea, I must go into that trade, I would not do, just because those swap costs. But on the other hand, having the swap profits, if you just investigate a chart and looking around, hey, I have to look for a short trade in euro US dollar. A long trade is, so to say, forbidden, because in euro US dollar, short trades are profitable for swaps. Why not just looking for that within the euro US dollar chart? Still, we have lots of symbols which have profitable values, profitable swaps, and just investigating those charts against the right direction within those symbols. There are still enough trades while losing money just for paying swaps. Positive swaps are just an inherent edge, so we have a probability advantage on our side. As I mentioned, US dollar, Swiss franc, after 2 days, we have an intrinsic probability advantage. That's the reason why I mentioned it now, third time, I think. It's really a good thing to have those kind of edges. But we can do one step more, or maybe a little bit more intelligent than I have been with my brutal investment into those 18 instruments. We might just investigate the historical behavior of those potential candidates. And let's look around short term. Short term here means maybe a couple of months, 1, 2, 3, 5, maybe even 12 months back, and look what is the overall trend. And we can do that by a regression line in a chart. I will show you how to do that. Or we can use Excel sheets for that kind of investigation. And I will share that with you as well. But let's start with the really quite very easy stuff. And let me explain you first with an example of a trade for Australian dollar, Swiss franc. As you can see, I have an open trade, a long trade, 0.1 lot, and the red line is marking the point in time for opening the trade. Let me zoom in a little bit, and now we have a history within that chart of about 1 year. And even with your blank eye, naked eye, I think that's the way how you tell it in English. With your naked eye, you can see overall it's going south. So in principle, to going for a long trade in Australian dollar, Swiss franc doesn't look that good. And of course, you are right. I have invested nevertheless, and therefore within my table you can see, okay, I have lost already 23 euros with that trade, because still we are below my entry level, and that's not good for a long trade. And now let me show you one possibility to get that behavior going south even a little bit more pronounced or more mathematically. Within MT4, you have the possibility of insert channel linear regression, and by doing so, it's just something like that. And let me go until I open that trade. Now I have a history of about 1 year, and that blue line here is simply telling you what's called the regression line. So it's the best linear representation of those prices within starting from here, going to here when I open the trade, and obviously that line goes south. So we have a negative slope, so it would be not the best idea to have a long trade in that symbol. So we can do a little bit of chart analysis and can do that even mathematically. But let me show you another example where we have been on the better side. Let me go for Euro US dollar, and let me zoom in that we have once again about 1 year history. So now this is about 1 year price history for Euro US dollar. And even without any regression line, everybody can see that it goes south. Good. So we know that. So going for a short trade, which is the positive swap direction, why not? Brilliant idea. And as you can see, in this case, the trade itself is profitable as well. Quite opposite to the one in Australian dollar, Swiss franc. So it's nice to have that trade, that short trade, and earning money every night additionally is even better. So we can do it just within the chart. But we can do that kind of analysis, and I only want to touch that briefly because it's just an Excel sheet, and you can do similar steps by your own, I know that. But if you have interest in those Excel sheets, of course you can have them. And I have just looked for 2 opportunities or 2 ways of thinking in order to find a clue for a given symbol. In this case, I concentrate on British pound, US dollar, and for that pair we have positive swaps if you go short. And as you can see already within the chart, that's now really long-term chart starting at 2004. Going short for that pair is on a long end definitely a good idea. So even having positive stops into that direction is already visible a good idea. But we can do it mathematically as well. So what I did is, let me switch to the very end of the table, even if I don't need to go at the very end, but anyhow, I decided to do that. What I did, I just calculate a virtual trade for just one day. And what you can always starting at the close and ending at the next close, and just going for what would be the result of such a trade. And if you look for those numbers, you can see, okay, they are in the order of a few 10, and they are a little bit further up. There will be trades even 100 euro or 200 euros. So you see 10 euros, 20 euros, something like that. The swap profit per night is only in the range of a few euros. And therefore, I mentioned the potential risk by the trade itself is always higher. So therefore, going into the overall right direction is a good idea. From one day to the other, we might earn 50 euros or we might lose 70 euros. But on average, and I switch back to the picture, but on average, the numbers going short are positive. As you can see, if we look for the last 300 days, all the daily changes, you see we have for one lot trade 34 euros. That's a good hint to have short as a preferred direction. So let's take that as a confirmation. Another idea, and now I have really to go back to the very end of the table. Now I did a little bit different. I started a trade just for one night. So that's a minus 71 euro here. Or I open the trade here and end the trade at the very end. Or I open the trade here, ending here, and those 2.51 euros are the average profit per day. And now the numbers became smaller because the averaging effect is much more pronounced. So if I go back here, those trades will be already 100 days. But the daily profit just from the trade itself is now 3 euros. And that's what you can find within the chart. That's a green line here as a moving average of the daily profits as an average of such a trade based on the end of the price line here, and on average it's positive. So it's a confirmation going short in British pound US dollar is a good idea. So that's another idea to select the best for that trading strategy. I mentioned that there's a tool around, and that tool, and I have to start a little bit different, but I can start here already going for that tool, changing the profile to Peter, and then I can take the time here to show you one address I would share with you. And as I mentioned, that tool is not for free. It costs money, and you will find everything on Peter's homepage. But I want to share at least with you what's possible with that kind of tool, because it's a really interesting tool. As you can see, we have three screens. One is the symbols, one chart screen, and one additional chart screen here as well. But let me explain everything which has been coded by Peter Milner directly within an MT4, so you can see it live in action. We have those three windows. On the left-hand side, we have, so to say, the market watch, all the different symbols, and all symbols which are in the real market watch are now listed here again. Okay, good to know that. And now we find a lot of information already within that left-hand side window. Let me start with what we are talking about that webinar. Swap long, swap short. Okay, here we have it. Australian dollar, Swiss franc, 2.1 points translated into 1.9 euros for a long trade. A short trade, minus €5.30. So we have that information already visible and in colors. So that's very good to know and to see. You can immediately see which direction is positive for any forex pair. And if you would put additional instruments like indices or other currency pairs into your market watch, they will show up here as well, which is good. But we have much more information here as well. You see within the chart, which is always, in my case, a daily chart, and another chart, in this case, the right-hand chart is a 5-minute chart. Within that chart, we have 4 different EMAs in order to have an idea what is the overall trend. Okay, in this case, it's definitely south. So we have that information as well. In red, we have the so-called price volume profile. And that means that at specific levels, there is much more trading activities than on other levels. Let me change the symbol and maybe I can have a better idea for that. Now you see those mountains. So at that level, we have most of the trading activities, followed by this level with second most trading activities. That's something you can see directly with that mountain-like profile. Okay, and we have that in the 5-minute chart as well. And finally, we have another chart down here, which is based on seasonals. Seasonals in the sense that Peter looked back for the last 5 years and calculating the typical behavior within those months. And you see in blue the average behavior over the last 5 years. And therefore, we have a forecast for the next 60 days. Okay, interesting to know. So that would be, if it goes as in the past, then it would follow exactly that kind of red line. Good to know that. We have that in the table here as well. So Australian dollar, New Zealand dollar would be for the next 20 days going north, the next 60 days going north. Good to know. Let me go into that chart. I have just to click here, and now we have instantly as a daily chart, US dollar, New Zealand dollar here, and the 5-minute chart here. But the forecast is north. And what about the swaps of that direction? Okay, swaps are green for short trades, so it's a wrong direction. So here it would be better to have an idea for a short trade. The seasonals would not confirm that. The chart itself doesn't look that bad. So I can even go for most trendy behavior. You see here, New Zealand dollar, Canadian dollar, everything is red. Oh, but what does it mean? That means on a 5-minute chart, we are below all the 4 EMAs. On a H1 chart, we are below all those EMAs. On a daily chart, we are just on the edge. The number within here is telling you how many candles have been below for the complete 4 different EMAs. So you have something like the trend strength. If all is red, it goes south. Unfortunately, we will not earn money with a short trade. Because that is red here as well. You see, it's really quite cool tool to investigate the markets, and we can even by scrolling, just clicking here at the bottom, we go through any symbol and get immediately the charts. And yeah, it's really handy to have such a tool. And if you are interested, just visit Peter's homepage and get in touch with Peter if you may want to have that kind of indicator. It's helpful in sense of swaps, trends, and overall chart analysis. Oh, my voice is really going down today here, unfortunately. But we are more or less at the end of the webinar. I hope you got an idea what it means to have positive swaps as a free edge. And really think about it. Use it as an additional element for your trading. If you go for discretionary trades, go for the right symbols with positive swaps, because then you get an intrinsic edge for your trade, and that's always a positive aspect. Or you may even go for such systematic profiles or swap portfolios, like I have been done, just investing in all the 18 which have more swap profits than €1 per night per one lot. Or you may go through that kind of selection process with slopes in the chart, only going into those instruments which are confirmed by that slope. Anyhow, finally, it's not the holy grail. No, definitely no, because we still have that normal trade risk. I mean, if I open a short trade on euro US dollar, which is very good in terms of earning swaps, but if the price goes north, then that trade will be ruined as well. The good thing is that it looks like going into the direction of positive swaps is in favor earning money with that trade as well. But I cannot, let's say, really prove that because I don't have historical swap values, so I cannot do a back test for that. But at least it looks like. Normally you get statements from me more mathematically driven and not like it looks like. But in this case, I can only use the phrase it looks like, that going into that direction in majority is in favor with the trade itself as well. And that's really brilliant. Anyhow, if you have interest in slides, maybe you have downloaded those, but even if you forget, just drop me an email. And if you have interest in the Excel sheets, of course, I can send those to you. And if you have interest in that indicator, please get in touch with Peter. You find that link within the slides, or if you forgot it, just send me an email. I make sure that you get the right contact. That's for now. That's for today. It's still quite warm, 32 degrees outside. Okay, let's go for that. And I can tell you I like it. If we have temperatures above 30, that's my best situation. Anyhow, I hope you enjoyed the webinar. Next month, we will, of course, have additional webinars. And the main topic will be correlation. Let's think about that next month. Okay, enjoy your time. Have a nice evening. Bye-bye.